Let's discuss predicting a crash, going into cash, gold, Bitcoin, and then the investing life cycle. There have been great comments on this video that I made. Get a load of this dude, still here predicting the big one. The key here is that I don't predict anything. I have no idea what will happen in the future. If you can know the future, please let me know, we can make a deal or something. But history teaches me that I cannot predict the future. So what can I do? I can be ready for whatever happens. Stock market crashes 50%, has happened historically, can happen again. Stock market doubles over the next 7 years, has happened historically, can happen again. Not from these valuations, so it's more likely that returns will not be higher, but I have to maximize my wealth over the next 7 to 10 years, no matter what happens. That's why we discuss scenarios, so that whatever happens, we are ready. Another great comment here about extrapolation bias, whether this now stocks going higher and higher are a self-fulfilling prophecy. We know that we can't predict the future based on the past, but the only thing is the past that we have. So yes, stocks are expensive. However, look at what you own. Don't base your discussions on the market. We discuss the market because this is YouTube. It's easier to, let's say, share a message with something that is familiar to people. However, I always try to revert to fundamentals. So check the fundamentals of your portfolio no matter what happens. Because if I look at the fundamentals of the market, 30p ratio, 1.2 dividend yield, stocks at 10x over the last 15 years, so great returns. Every time something similar happened in the past, the minus 60 real return crash followed. And the key question is, for you, what happens to me if a crash comes and what happens to me if a crash doesn't come? Which leads to the next question. Is it better to just hold cash, to buy the crash? That's what Warren Buffett is doing after all. And that is exactly what Warren Buffett is doing. He sold whatever was very expensive, kept still 70% of his assets. He is now 35% of Berkshire's assets in cash. 65% invested businesses that still keep on producing cash flows that he can then deploy in the future. But that's correct. And he has entered this huge cash position by selling most of his Apple position in the last year. However, if we go into cash, even if you put it into 10-year treasury yields, the current return will be around 1.5% real return. With real inflation, at best on cash you get 0. If there is higher inflation in the next 5 years, you might have lost 50% of your purchasing power by going into cash. So again, going into cash is a prediction game, and Warren Buffett is playing that prediction game. He has done it already a few times in history, 1968, 2000, 2007, and now again, waiting for that crash. I don't feel confident in predicting such things, so I have to be ready for whatever happens. Of course, Berkshire has this size issue where it would be hard for me to deploy 350 billion tomorrow. But my little money, that's something we as retail investors can deploy into perhaps less risk, still good reward situations. And there is, as we discussed, always the risk that money crashes before the market does. Which leads into the following comments. A lot of you, Bitcoin, gold, fear of missing out, everyone is making a fortune in the stupidest investments ever, gold miners still doing well. Over the last 3 years, gold is more than a 2x. For something that doesn't have a dividend, nothing, that is a great return. Bitcoin, even more, what's that, 5-6x. However, that is still speculation. I have no idea, and nobody knows, no matter if you spend 10 hours of research doing Bitcoin, nobody knows where will gold be in the future. So if you accept that volatility as a diversifier or something, be my guest, but then why are you watching this value investing portfolio? When it comes to gold, it has already done what it was supposed to do. If you were a gold bug, then you had plenty of it 3 years ago when it was much cheaper, even 6-7 years ago when it was at a third of the current price. Going then into value and what to buy, everything is becoming too expensive to own, gold, whatever. Taxes, farmland, so what to do? Yes, most things are very expensive, but there are some life pockets that are not that expensive. However, when it comes to the life cycle of investing, of course, when interest rates were 15-20%, whatever you bought then, you would have made great returns since 1982. The stock market is up probably 50x since then. So whatever did well. However, interest rates went down and now we are in this period with very low interest rates, which means very high asset prices, and that is something we have to deal with. However, a good investment strategy will be okay in good times, with low interest rates, with high interest rates declining, rising. This is a life investment cycle. Perhaps the best is accept the value that is there. We have discussed recently the quadrant, 8% dividend yields, 9% dividend yields, likely no matter what, plus 2 bonuses that I've discussed in the video. So we have to accept that if there is a crash, yes, all stocks will crash, but if we can reinvest not 1.2% yield of the S&P 500, if we can reinvest dividends of 8-9%, we can accumulate wealth by owning more of the global business pie. And that is a way to think about what can happen in the future. So crash, we don't know. Gold, cash, we don't know. Fundamentals is something that will give you a good return no matter what happens. If you like the idea, subscribe to this channel.